Today we have a company that promises to launch commercial satellites, not from the US, not from China, but from freaking Canada. Moreover, at this moment in time, the company is worth just $65 million on the stock market. That while potential competitors are trading for multiples of billions of dollars. Welcome to another installment of Analyzing Your Stock Picks, the series where I analyze your stock picks. Today we are taking a look at Maritime Launch Services, or these ticker symbols. Let's start off with a company overview and then go straight into my opinions of this company as an investment. So let's get right into it with first a company overview. Like I stated, GigaChats and GigaChadettes, MAXQ hopes to soon launch commercial satellites from their spaceport in Canada, in Nova Scotia to be exact. In the company's investors presentation, they are flexing pretty darn hard about this new potential spaceport. So here are some traits that they find important to note. Number one, it is privately owned, which allows for more flexibility. Number two, the property is located in North America. And number three, it has access from deep sea, rail, airports, all the shebang. Besides that, they boast an expected payload price of roughly $9,000 per kilogram to LEO, or low Earth orbit. And the company hopes to have a wide array of different launch vehicles, so they can also launch different payloads into low Earth orbit. And the company continues to talk about the spaceport being privately owned. So other companies, like for example SpaceX, use government ranges, which allow little or no flexibility and little to no prioritization of customers. So that could be a competitive advantage of this company going forward, offering significantly more flexibility and also being able to offer prioritization to companies that are willing to pay more. But I do have to slow myself down right here, because at this moment in time, MAXQ has launched 0 satellites to date. In fact, at the earliest, the company hopes to launch their satellites to space in 2024. And we all know about these timelines given by startups. Delays can and will most likely happen. As their launch vehicle, they hope to be using these Cyclone 4M rockets, which aren't actually in commercial use anywhere else as of right now. And according to our friendly Wikipedia, these Cyclone rockets are Ukrainian carriers being developed for commercial satellite launches. Honestly, the following is just speculation from my end, but supposedly there's this war going on in Ukraine. I ain't no rocket scientist, that's for sure. But relying on the Ukrainian government to meet their deadlines while they're literally being shot at, that seems like a recipe for deadlines being missed. Again, according to Wikipedia, the rocket is being constructed in Canso, Nova Scotia, and here the stated construction is supposed to end by 2024 or 2025. But also the maiden flight is supposed to take place in 2023. To be fair, I have no idea what's going to happen, since I don't even know how much Maritime Launch Services is relying on Ukraine for developing their rocket. Either way, this is a huge tail risk that you should be taking into account if you are investing in this company. I would really need to answer these uncertainties before I would be willing to yeet in my own cash. Aside from that, the company flexes mega hard about the fact that the space industry is growing explosively. However, ladies and gentlemen, if you see something like this, you should instantly be thinking about the how. How will the company be capturing this newly created market? It's cool and all if there's more wealth and more revenues being created, but if your company doesn't capture those revenues, who the freak cares? So I would rather focus on that, revenues and profits, especially profits. And now I think we've covered most of the company. It is a potential future satellite launch provider. Moreover, they hope to use Ukrainian rockets and they make $0 in revenues today. Now let's continue with my opinions. And I am not going to sugarcoat it. I really dislike this company as an investment. Sure, it is a really cheap way to bet on the space industry. After all, the company is worth just 65 million US dollars today. And if the company becomes a successful satellite launch provider in the future, they might just be worth a significant multiple of that figure in the future. Sure, that is true. However, there are a couple of reasons why I dislike this company so much as an investment. So, reason number 1. The balance sheet is pretty meh. While the company is sitting on $6.5 million in cash, all the assets of the company are worth just $13 million. And if you compare that to their liabilities, we can see that on a book value basis, the balance sheet is worth just $5.4 million. Which in turn means that you are effectively paying 16 times book value on the stock market. Also, the entire spaceport thus far is worth just $5 million on a book value basis. I cannot emphasize enough how little this amount is. Sure, it might be worth more in real life, since book value hardly ever translates directly into real life value. But most importantly, this $5 million figure shows us that the company hasn't put any significant cash into the spaceport as of right now. So even the balance sheet tells us that the company is just a pipe dream for now. And keep in mind, this was just my first reason. Reason number 2, I dislike this company as an investment. We do not know when we can expect revenues, since the first launch might happen in 2023, but I have a feeling that was the timeline that was announced pre-Ukraine war. And full commercial viability of the spaceport will surely not happen before 2025. Maybe even significantly later than that. That is a long time for a company to be making $0 in revenue. Reason number 3, they will most likely need a metric shit ton of dilution. After all, the company has very little cash on their balance sheet. And it seems to me that this future spaceport will need significant amounts of investments. Where will that money come from? Sure, governments might help, but the rest will come out of your pocket, assuming you are an investor, through dilution. Reason number 4, if a company sounds super exciting, like, I don't know, a rocket ship company, it is probably a lousy investment. This is just me being realistic. The chance of a satellite launch provider being a lucrative investment are close to none, especially with how many competitors are coming online. So we are talking about a super niche market, the launching of satellites, which is becoming mega competitive. For that reason, I do not see how MAXQ will ever become profitable. And I could go on and on and on with reasons and red flags. I think you get the point. I know rocket launches to space sound mega exciting. I also understand why investing in such a company sounds mega exciting. But from a rational point of view and from my analysis in this company, I do not see a clear path towards profitability. I don't even see a clear path towards revenues. Hence why I believe this is a lousy investment, and it is also a lousy gamble. Personally, I would much rather gamble my money on a company like ASTS, which has a very similar risk profile to MAXQ, meaning you could lose everything if you invest in these companies, but that company, ASTS, could at least realistically 150x my money if I invest today. So yeah, MAXQ, exciting company, shitty investment and shitty gamble. Hope you all that asked for this analysis don't hate me too much for saying this, but I do hope we can all admire honesty. And honestly, I do hope that everyone that invests in this company succeeds. I do hope you all succeed, however much I disagree with your stock picks. And with that said, thank you so much for watching. I love you all. Peace.